It's Clay Trader, and this will be a video chart on SARO. I wanted to get this one up as I've received quite a few requests for it, and also it has made a nice move, and it's in one of those junctures where it's pulling back some, and it's an area where assuming the company hopefully has some more good press releases or something up their sleeve, that it may be a nice area to pick up some shares, as it has pulled back and is no longer overextended. So I wanted to get this out there so people can keep an eye on it, and then also just because I have received quite a few requests for it. So just a quick little history. As can be seen, stock was in what is a very clear and evident downtrend here for a while. For about 2 months, 2.5 months or so, price just slowly was drifting downwards. However, past 3 or 4 days, the chart has really woken up, and right here has busted out of the channel. And the good part about that, so keep this in mind because I'm going to delete it all, but on the breakout of that channel, you look and see this great volume. So when you see breakouts, nice green candles, and then on top of that you put that there's above average volume, I mean, that's just one of the key setups that you're looking for in the world of technical analysis, is kind of all the stars aligning. And for this, you did have that. You had a resistance break, you had nice price reaction, nice green day, and then also above average volume. And then from there, it popped up here, and you actually got a hanging man candle, and those are one of those that suggest a pullback's coming, just because that's the candlestick pattern. So here's your hanging man. And then sure enough, the past couple days have been red, but it's one of those things where it's nothing to freak out about because the chart was overextended. And if you look at this white line here, this is what's called the upper Bollinger Band, and whenever these candlesticks close above it, it puts the chart in overextended territory, overbought, whatever you want to call it. And usually stocks need to pull back, and we had it close above, 2 days in a row. This day was way above. Then you combine that with the hanging man candle, and these last 2 days are something that would be expected, and like I said, nothing to freak out about. The only time you really start to freak out is when key support levels fail, and at this point in time, there's been no support levels that need to hold that have not held yet. So right now, it's just normal, healthy consolidation. So the point of this video is going to be basically to just go over what some of these key support levels are, and then go over the resistance levels. But right now, it's more of making sure the support levels can hold, rather than, I don't want to get too far ahead of ourselves here and start talking about resistances far off, because at this point in time, we just want to stay focused on whether or not the support levels can hold up. So with that, we'll just start off with the resistance, and on any sort of bounce, 0.0019 is going to be the key level. And then a little thinner one to keep your eye on is this 0.0015, which is right here. So these are going to be your two key resistance areas on any bounces. So keep an eye on those, and we'll see what happens. And actually, there's a key price level right now that's kind of underway, and that's just 0.0012. And the reason I call it key is, look at it over here. We had it act as support once, twice, 3 times, 4 times, 5 times, 6 times, 7, 8, 9, 10. So back here between May and June, literally about 10 times the price came down here to 0.0012 and bounced off. A couple times it did drop below, but the point being, it always closed above this level. So this is a key support level that has been holding up strong so far. Now if this one fails, not the end of the world, because you still have some moving averages below you. But ideally, it'd be great if this 0.0012 level could hold strong as support. I'm going to leave that yellow because it's a key level, but at the same time, once again, if it does fail, it's not the end of the world. It's just more of one of those ideal support levels. Now, in terms of kind of important support levels that you'd like to see hold, the first one is being right here where this candle closed on the breakout day. What I'm going to actually do is make these solid lines here. This closed right here at 0.001, so this is going to be a key support level. And actually, if you look at today's low right here, 0.001, you can see that the price came down and bounced very nicely off of it. Now, the really key level that I don't want to see fail, and that should have no problem holding if this is a true bullish move, is this 0007. Like I said, if this move here is real, and if there's real strength behind it, there's absolutely no reason in the world why this 0007 support area can't hold. I mean, maybe the price won't even get down there, but if it does, it needs to hold. And like I said, there's no excuses for it not to be able to hold if this is a real move. And what I mean by real move is if there's true strength behind this, and it'll be a good kind of gauge on whether or not there's any dilution or anything like that going on. Because if there's not, then I don't see any supply that's going to be able to push this down below that. So this is, and I thought I should make this line thicker to represent that. So 0007 is the key support level that I want to see hold. And for you really diehards out there, you do have another one, so I'll make it thick and dotted. This 0006 is another support area that you have. But after 0006, it's something's just not right with the play if that one can't hold. And if you can just visualize what that would look like, you'd have red candles all the way down here that are now down in this area. So from being up here to down here, that's just a clear sign that something's just not right. Once again, let me put out the disclaimer. I'm not saying that the price is going to come down here and test that. I'm just saying if the price does, you really want to see these levels hold. Hopefully 0.001 holds, or better yet, hopefully 0.0012 holds. But 0007 is definitely the must-hold level. So we'll just call that the must-hold support. So there we go. Must-hold support at 0007. And then looking down at the indicators, I do like to see this right here. The MACD has crossed over zero, just barely, but it is over zero, and whenever you get those zero line crossovers, that's a good thing to see. Stochastic was actually denied from going up into the power zone, but still way above 50 and just doing a little cooling off now, so nothing to worry about there. And RSIs, yes, they're all going down, but once again, that's just a cooling off process. All the key ones that you really care about remain above 50 also, so that's good secondary confirmation. But overall, a good looking chart, assuming the support levels can hold. Right now, right now I'm just chalking everything up to healthy pullback, healthy consolidation, and no worries at the time being, as like I said, the chart was overextended. On another note, if you look down in this post, you will see a link that leads to a free ebook. I'd encourage you to click on that and go to the link, sign up for my newsletter, and get some free articles, free charts that I'm watching that I don't make public. So they're only available if you sign up for the newsletter, and it is free. And like I said, you get a free ebook with signing up, so you really have nothing to lose there. So I'd encourage you to check that out. If you do have any other questions on SARO, please shoot me a message, and I'll help you out. But if not, thank you for listening, and hope you learned something.